Many of these soon-to-be retirees that I sit down with today are concerned with one, if not all three, of these hidden dangers that are found buried inside of their traditional tax-deferred retirement plans. And number one is taxes. We don't know where taxes are going to be in the future, but the suspicion is they could drastically go up over time. Number two is stock market volatility. Most retirees can't afford to lose any money because they don't have time to wait to make it back up. And number three is RMDs. As of today, you know you have to start taking money out of these retirement plans by the time you turn age 73. And if you don't need the money, that's a huge cause for concern. So if you are transitioning into retirement and you have a lot of money saved in these tax-deferred plans, such as 401ks, 403bs, 457s, IRAs, pension plans, and anything similar, in this video, I'm going to share with you a unique strategy that I have been using with a lot of my clients, teaching them how to transition out of those tax-deferred accounts with really high fees and stock market volatility and into accounts that have zero stock market volatility, grow your money tax-free, which means they have no RMDs. First, you either need to be past the age of 59 and a half or already retired to do this. But let's say that you are and you have a lot of money saved in any of the aforementioned plans, or you can take a lump sum out of your company pension. One thing you can do to get it out of the stock market, remove all of the stock market volatility, and get rid of those pesky high fees is roll that money into what we call a fixed indexed annuity, also known as an FIA. Think of an FIA as a wrapper that you can place around your retirement dollars for a certain number of years. 5, 7, maybe 10 years. In exchange for your money being inside that wrapper, or what we call a contract, you're going to get two main benefits. Number one, no more stock market volatility. You will just see that money grow over time. And number two, no more pesky high fees. Well, yes, there are some FIAs on the market today that do charge fees. There's also a good amount of them that don't charge any fees and also give really good growth over time. Next comes the key ingredient to transferring these dollars into an account that's going to grow tax-free, so you don't have to worry if taxes increase on you in the future, and you don't have to worry about those pesky upcoming RMDs. Insert what we call an IUL, also known as an Indexed Universal Life. An IUL, in its simplest form, is just a permanent life insurance policy that has almost like a savings account feature attached to it, or what we call cash value, and that grows over time by you simply overpaying on your premium. Now, because of the fact that an IUL is a life insurance policy, there is no RMD requirement on this cash value. It can just grow and compound over time. And you, as the owner or the insured, have the ability to access that cash value in the future 100% tax-free through different policy loans. Now, the downside to this is you or somebody in your immediate family does need to be healthy enough to actually get approved to own an IUL, because it does come with a death benefit component to it that is accessible to you while you're alive. So if you were to get severely sick or injured, you actually have access to that death benefit for anything that you need. And if you don't, well, it's all going to transfer to your family 100% tax-free when you die. Okay, so now how do these accounts actually work together? Well, once we have the IUL and the FIA set up, we can start planning what's called a strategic rollout out of the FIA and into the IUL. If the individual is past the age of 59 and a half, usually they'll be allowed access to about 10% free withdrawal per year out of the FIA, meaning they can start cashing out 10% of that balance every single year. Now, they will have to pay the income taxes on that money as they're withdrawing it, and then they can take the net dollars received and deposit that into their IUL, where it can just grow and compound 100% accessible to them in the future, all tax-free. Okay, let's take a look at an example. Let's say we have Dan here, who is a healthy 60-year-old male with $1 million in his traditional 401k, and he doesn't need the money, but he is concerned about stock market volatility, high fees, and those massive RMDs he's going to have to deal with when he turns 73 if he hasn't touched his money. So one thing Dan could do is roll this $1 million into an FIA, where you won't have to deal with any more stock market volatility or any more pesky high fees. And he could start doing his strategic rollouts, taking money out of the FIA and depositing it into his IUL. So let's say Dan starts taking out enough money to net $100,000 every single year. Let's just say he does this for 6 years. And over those 6 years, he deposits $100,000 every year into his IUL. After that, he could take out an estimated $60,000 every single year tax-free through policy loans from his IUL until he's 90. And the best part is, Dan doesn't even have to do this. If he didn't want to touch that money, he could just let it sit there and grow and blossom. And whenever he passes away, all of that money is going to transfer to his beneficiaries 100% tax-free. What this plan accomplishes is protecting Dan's money from the stock market, eliminating taxes in the future when they could potentially be higher, and eliminating the RMD requirement, meaning if he doesn't want to touch his money, he can actually leave it as a legacy for his family long term. So as you can see, this unique strategy works. We do it all the time. It's just whether or not it's going to work for you. And that's really going to be dependent on your income needs and your goals for your money in retirement. Before you do anything though, I do want to recommend that you consult with a licensed financial professional that can help navigate you through this path and figure out what type of strategy is best for you. If you want to learn more about IULs and FIAs, I have linked 2 videos here that will tell you more about how they work. And make sure you subscribe so you don't miss another video teaching you some unique tips and tricks about how to stretch and maximize your money. Catch you next week on YouTube.